Good morning and welcome to today's 5 with Fitz. I'm Keith Fitz-Gerald. Thanks, as always, for joining me. You know, I told you yesterday that I had no problem buying into weakness, as I mentioned on Stuart Varney's program before the opening bell and right here in the 5 with Fitz. Now, I hope you made note and that you're paying attention. This morning it's green on the screen and we're off to the races. Always remember, despite the fear, the uncertainty, and the doubt, you invest in the best and you ignore the rest. Why? Because days like today will make you smile like a Cheshire cat. Here's my playbook. Number 1, less office equals more opportunity. For the first time in 25 years, more office space is being demolished or converted than built. Now, remote work, hybrid models, and shifting corporate footprints have left vacancies stuck near 19%. And developers right now are planning to convert 85 million square feet of office space in the next few years. Now, people are predictably reading into the state of the economy and leaping to all sorts of conclusions that this is bad. Not so fast, in my humble opinion. This is very telling. Much of that office space was in fact built on spec because developers had access to capital, not because the space was needed. Now, I say what's happening is good because now what we're going to see is developers right size. Now, the way to play this is counterintuitive. Avoid Avoid legacy office REITs that are stuck in 2019, office space specifically. Now, instead, focus on those tied to industrial logistics and power, urban mixed-use conversions, residential retrofits and major retros, and my favorite, medical rehab, post-operative care, and longevity. Now, case in point, my fave, an REIT focused on the growing aging population, has returned to 86.44% since I brought it to the OBA's family's attention versus 44.12% from the S&P 500 over the same time frame. At the same time, you also want to think about data centers. They're really the new square footage. Many investors are focused on real estate names like Equinix and Digital Realty, which lease out the physical space and connectivity. But the real play here, in my humble opinion, is companies powering what happens inside the walls. Again, I could be easily wrong, but we get a lot of stuff right. And we're very fortunate. One of my favorite choices has turned in 1,495% over the last 5 years compared to 92% from the S&P 500. Well, the other, a third, is just powering up, but has already returned triple digits. Now, the thing I want to drive into your skull this morning is the same thing that was driven into mine years ago. If you've got stuff like this covered, then excellent. If not, and you'd like some help, I'll throw my hat in the ring. Number 2, is it time to buy nuclear stocks? Now, Meta just inked a 20-year deal with Constellation Energy to buy 1.1 gigawatts of nuclear power. The Clinton-era Clean Energy Center, which was on the verge of shutting down, now has a new lease on life thanks to Meta's AI ambitions and energy demands. At the same time, Constellation shares, very predictably, were up 9% on the news, but have since given that back after the sharks stuck it to the minnows. It's the latest signal that tech giants are piling into nuclear. Amazon, Google, Meta all have pledged to triple nuclear capacity by 2050. Now, my POV is this. That sounds great on paper, but building new nuclear power plants still takes decades, even if Uncle Sam starts fast-tracking permits. So the question you want to think about as an investor is it time to buy nuclear stocks? I submit, think like a shark. The trend, yes, very definitely, that's going to continue. But the hype, no way. The real cash flow lives, at least for now, in today's energy backbone. 3 areas: midstream transporters, pipelines, and utility-grade natural gas players. You want to invest accordingly. Now, this brings up an important point. One I see a lot, right? Keith's investing tip. Investors constantly flit from stock to stock the way they flit from table to table in Las Vegas. Stop doing stupid stuff with your money, folks, and buy stocks and companies that'll be there when you need them. It's a very different way to think about things. Just saying. All right. This is a big one. Hang on to your bippies. Number 3, Palantir. Is it Big Brother or big returns? The New York Times just stirred the pot big time, suggesting that Palantir is helping the Trump administration build a master surveillance database. Predictably, scores of folks have gone absolutely bananas and speculation is rife. You may like what's happening or you may not. Either way, that's moot. Your job as an investor is the same as mine. Stick to the facts. What the president actually did is sign an executive order to eliminate information silos while streamlining data collection across various agencies to increase government efficiency. Now, boy, is that a mouthful. But the fear is that this is going to unleash some sort of police state. Respectfully, we're already there. And you know what? We've been there for a long time, fellas, folks, people, whoever's listening. The government has already got access to every bank account, your income, your employment history, your medical claims, disability files, criminal and civil, court records, student loans, passports, and thousands of other data points. If it's documented, licensed, billed, or regulated, they already have it. Now, every government already has it in one form or another around the world. What's really got folks in a knot this morning is the thought that suddenly everything will be available at the touch of a button and accurate, or at least as accurate as people have been truthful, which is a topic for another time. Talk about irony. I mean, this makes my brain explode. If you're using Facebook, TikTok, a smartphone, GPS, a mortgage, you've got a credit card, or simply paying a utility bill, congratulations. You have voluntarily contributed to the greatest single most valuable knowledge base ever compiled in human history. Your location, your behavior, spending habits, contacts, medical appointments, browsing history, they're all being collected, processed, and resold every day for billions of dollars. What's more, the Chinese and other hostile actors have actively mined every one of those sources. And you're worried about our government? And all of a sudden, it makes no sense. I mean, I understand the hesitation and skepticism. I really do. Nobody wants to feel like they're being watched, including me. But let's not kid ourselves. It's a little late to play naive. A, privacy is an illusion we traded for convenience a long time ago. And B, real surveillance has been woven into our lives for decades. So now what? The world is going digital. There's no stopping it. We're not going to turn it back. You can't put the genie back in the bottle. And that means a rise in information sensitivity, whether you like it or not. The only real choice left is whether you want to be at the table or on the menu. Now, as an investor, okay, this is not difficult. Don't make it challenging. Don't make a mountain out of a molehill. If you don't like what's happening and you're convinced that Palantir is bad news, then don't buy the stock. It's as simple as that. If you do, then do buy the stock. I think it's going to go to $200 a share. Here's the deal with this, right? The investing tip to think about. Not all risk is bad. Some of it is just mispriced from time to time. The more controversial a company becomes, the more you need to understand why. And I mean really understand why. Number 4, should you buy HIMS? All right. Telehealth disruptor HIMS, a company we've talked about in the past, has just announced that it's acquiring Zava, a European platform that will expand its footprint to Ireland, France, and Germany. And here's the part that's interesting, potentially grow its active customer base by 50%. Now, I personally smell the first real global direct-to-consumer healthcare brand. Should you buy it? Loads of people are. Traditional healthcare needs an overhaul for any number of reasons. It's too slow, it's too expensive, too fragmented, dominated by insurance companies, etc. I could make the case that HIMS has a long way to go if it can A, successfully continue to end run both traditional in-person medical visits, and B, continue to end run greedy, backwards thinking regulators who suddenly don't dig in. Now, it might make sense to begin accumulating on pullbacks. I know it's run a long way and run a lot, but again, I can see it going a lot higher. I can also see, however, a substantial increase in short interest and scuttlebutt, which tells me that Wall Street sharks smell blood in the water. Lowball orders could look nicely too, come to think of it. So, big Anyway, number 5 today, Neurolink counters. Yesterday we spotted paradromics in the brain tech quiet storm. See number 4 in yesterday's 5 Fits. Today, Neuralink just flipped the switch. Pardon the pun. Uncle Elon's brainchild raised $650 million in a new round of financing backed by heavyweights like ARK, Sequoia, Founders Fund, Live, and Thrive, and Lightspeed, among others. Make no bones about what's happening. The neurotech arms race is real, and the world's smartest investors are betting on brains meeting bandwidth. Now, I want you to be sure that you're among them. Think early stage AI, medical devices, or even hardware interface plays like ASML, and NVDA, NVIDIA. It's not about who makes the chip or even the chip itself like people think. At this stage of the game, it's all about who's going to connect it. And you guessed it, the OBA family is already on board with several key names that are not yet widely understood to be working in the area, which gives us potentially a huge advantage. Now, Keith's investing tip, the faster the world moves, the more valuable early positioning like this becomes. So start thinking about it. Today's bottom line, you attract the energy that you give off. If you invest in optimism, and you'll attract profits. Good vibes and positivity are contagious, and dare I say it, profitable too. As always, let's make it a great day. You got this, I promise. And as always, thanks for watching. See you tomorrow.